Hi there. In the last two videos, I talked about why the UK tax code is such a mess, how it got there, the cost of the UK economy, and what a good optimised tax code looks like. But those issues are all just so much academic hot air unless you can figure out a way to actually implement any good system. How do you prevent the losers from complaining too much? How do you stop the windfall wins from the winners causing distortions? How do you ensure that companies can still continue to get investment? How do you stop VAT changes from creating short-term spikes in inflation? How do you stop those people who recently paid stamp duty feel like they're losing out? And most importantly, how do you overcome those two very human problems which always get in the way of any attempt to reform taxes? So that's what this video is about. How do you implement a tax reform? Because that is where the skill really comes in. Let's start with VAT. Now, as we've said, VAT, because of the cliff edge and because of the various exceptions, is very distortionary and does damage the economy. And so we need to do two things. One is to get rid of that cliff edge by applying VAT to everybody in terms of any size company. But to cushion the blow, what we do is that we make the companies of a certain size, you give them a rebate on the VAT they've paid, so they don't feel like they're missing out. And you gradually taper that rebate down, so that when you reach, say, 100,000, which is the current cliff edge, or maybe a bit more, there's no rebate, but it gives you a chance to absorb those additional costs and to change slowly for your business. And on the wider issue of what you include in VAT, you do two things. First thing you do is you work out how much extra tax revenue you receive by widening VAT to cover everything, so all the things currently not covered by VAT get covered. And then what you do is you figure out what you can afford in terms of a reduction in overall VAT so that it is cost neutral. And so you have VAT applied to everything with no exceptions, but overall VAT goes down. So that means that the burden is spread evenly, and most people won't lose out very much net. Next, we'll look at property taxes, council tax and stamp duty. As I said, stamp duty is hugely distortionary. It prevents people from moving, it reduces the number of transactions in the marketplace, stops mobility, discourages builders from building properties, all of which are harmful to the economy. So what we do is we simply get rid of stamp duty and council tax, and we replace it with a single land/property tax. And that is directly proportional to the value of the land you sit on or the property you own. If you want to, you can put it on a curve so that those with higher holdings, more expensive holdings, pay a little bit more proportionally. It's a political decision, but the point is everyone pays it. Because it's directly proportional to the value of the land, it effectively covers much wider bands than the current council tax, so it is fairer in its proportion and it's split across income levels. In order for this to happen, you need to be able to do evaluations often, at least once a parliament preferably. And in order to prevent those people who have recently paid stamp duty from losing out, what you do is you create a credit. So if you've literally just paid your stamp duty the day before the new scheme comes in, you have credit in the bank equal to the value of the stamp duty you paid. And every year that credit gets reduced by two things. One, the amount of land or property tax you would have paid had dropped in credit, and a 5% reduction to represent the time value of money. So if you paid your stamp duty, say 7 years ago, then your credit is the value of that stamp duty, take away 7 times 5%, that's 35%. So that's your starting value of your credit. So anybody who's already paid stamp duty does not lose out. And then you use that to fund local services. Because of the much wider spread of valuations, It allows people who are at the lower end of the income scale to pay less, and those at the higher end to pay more. And if you want to buy more land, well, if you want to buy more assets, well, then you'll pay more. And it will also help to encourage people who perhaps have bigger assets than they really need to sell those assets to reduce their tax bill, and further opening up the property market with more liquidity, which it desperately needs. Next, we come on to income tax. Now, if you move from the current cliff edge style taxes to a curve, the sinusoid curve that I just explained in the last one, you by definition end up with quite a few winners and losers. And in some cases, depending on where you sit on the income distribution, you can be quite a big winner or quite a big loser. Now, if you create many losers and many winners, then you're going to have a problem. You're going to have a lot of very unhappy people, and you're going to have a lot of windfall gains by people who haven't really earned them, which in turn will cause some distortions in the economy. So rather than transition on day one from what you were doing to what you will be doing, what you do is you cushion it. You delay it. You work out what your tax was going to be under the old system, what it is under the new system, and then in year one, you only get 20% of the benefit or the loss. And the other 80% stays where it was. That way, if you are a loser, you have got time to plan and change. And if you are a winner, you also have time to look at what you ought to do with your life and with your work and your family. Every year, another 20% is added or taken away, and you get more and more, or get closer and closer to the new system each year you go. At the same time, what you do is you pass a law that says that companies are allowed to cut salaries of people who are winners, provided that their take-home pay is still higher than it would have been before, and only so that they can use that cut to recompense people who would have been lower. You create a new commission that is allowed to check all of these, and companies cannot, under any circumstances, use it to cut their overall bill. All they can do is use it to restructure their wage bill, so net neutral cost to them. The idea being is that you can bring the wage structures within a business more in line with what they otherwise would be if you hadn't had the change in the first place. Leading the way, you'd start with the civil service, and you would do the same thing there. Again, making sure that any change was net neutral. Which brings us on to another point, is that for order for this to work, it needs to have some level of tacit support, or at least not active dissent. And if the population at large, if the press and media believe this is a way to raise taxes by the back door, or give big tax cuts to your friends by the back door, there will be hell to pay. And so you're going to have to do this in a completely neutral tax revenue way. And to make sure that's done, you'll need a third-party policeman. I would suggest the OBR, together with representatives from some of the key economic think tanks on both left and right. It's just on a separate commission, and it's their job to review the new levels of tax so that the net revenue taken by government remains unchanged for any level of economic activity. If, as we hope, the new system results with more economic activity and there's more tax revenue, fair enough. But except for that one situation, it should be net neutral. No one should think that this is a grab for cash, otherwise it'll lose support. One quick thing, Harley here, say hello Harley, has a quick request. Would you mind hitting the like button and maybe subscribing? Most people who watch these videos don't, and it really, really helps. Okay, that's it, back to the video. And then finally, we have the various exemptions and tax incentives for investment. Some of these were created with good intention, but many of them have hung around long past their sell date. And so what you do is you sunset every single tax incentive, tax exemption. Every single one is sunsetted. So it doesn't get taken away overnight. They get sunsetted for between 3 and 10 years, depending on the nature of the investment. So some infrastructure investments got a long life on them, so they would go for 10 years. Some of them you'd expect to see return much shorter, so they'd only have 3. You'd allow any existing investment under discussion to go ahead under the old rules for 6 months. So if somebody's about to raise a lot of money, you don't want that to be disrupted, because it'll cause massive disruption in markets. So they can go ahead with those deals, but only for 6 months. And then after 6 months, there are no new exemptions. Every investment must be made on its own merits. And if for any reason it's decided that some tax exemptions, some tax incentives are required, say perhaps we would be the only industrial nation that didn't give incentives or exemptions for something like, let's say, pharmaceutical R&D, then fine, we can go ahead and do that as a one-off exception. And as previously discussed, it would have 2 limits on it. One would be a time limit. It only exists for no longer than the length of the Parliament. And the second would be a conditional one, which is once a certain amount of investment is raised or other easily measured target had been reached, it automatically stops. If at the end of the period, or when that target is met, it's determined that actually it's doing really well and we still need it, then you can make a positive decision to do so, a transparent decision to do so. And again, you create the same conditions, time-based and conditional. We shouldn't let any of these exemptions, any of these incentives just sit there on the books so they distort investment decisions long after when they're needed. Well, so far so good. But what are the blockers? Well, there's a couple. First, you have the civil service. A complex tax code means that you have lots and lots of experts, lots and lots of staff, and lots of power centres. And they are not going to like to give up their fiefdoms, which they'll have to if they have to implement such a system. And as it's the civil service who'll have to help you actually implement the reforms, they'll drag their heels, got reasons not to, and eventually will fail. So what you need to do is create a separate task force whose job it is to come up with all the legislation, all the rules, and enact it. You could second people from the civil service to take their expertise, but they must work under different rules than the civil service. They must work under the rules of the task force, which means they must be accountable. They must live and die by their decisions. They have to be fired if they do a bad job, or at least sent back to the civil service. And the task force one job is to make itself redundant by fulfilling its function and delivering the reforms. The other thing that you have to worry for is vested interests. So various industries in particular are going to hate the fact that they're going to lose their preferential status when it comes to exemptions, when it comes to investments. And so what you need to do is get them on side early. We are now partway through our second year of Parliament, and I doubt very much whether our current government will do any of this. So we're looking at a new government coming election. So whoever is interested in fixing our tax system needs to start talking about it now. They need to start explaining to people how it would work. They need to talk to the other parties. So make it clear to them that it doesn't stop them if they get power at some point in the future of enacting their own rules, their own political desires. It's not intended to stop taxing the rich or progressive tax rates. And that's not what it's about. It's simply about creating a code that doesn't distort. And so if you could communicate that early, even if they don't come on board, they at least know what the plan is. And again, it's all about transparency. Those vested interests that want to stop you, you can explain to them that it's not going to stop overnight. It will go some way into the future. They'll have time to transition, time to prepare. So all in all, not easy. It will take a great deal of political courage, particularly as there will be losers. There kind of has to be for it to be worthwhile. And as I've said many times before, those who win don't say thank you, and those who lose will punish you. But unless we have a government, politicians brave enough to give it a go, then frankly, we're going to be stuck with a non-optimum tax code leading to poor economic outcomes at a time when our economy is on our knees, and frankly, because of the demographic issues that we face, is slowly getting worse. On that cheery note, ta-da!